In early 2025, Tesla's RSI dropped below 30, oversold. And everybody in the comments started screaming, time to buy. Then Tesla fell another 26% anyway. That's what we're unpacking today, because reading RSI wrong is one of the most common ways newer traders catch a falling knife and don't even realize it. Hey, what's up? Welcome back to Chalk Talks with Coach B. Today we're talking RSI, the Relative Strength Index, one of the most popular indicators on any charting platform. If you haven't watched the support and resistance episode yet, go check that one out, linked in the description, because RSI works best alongside those levels. And as always, drop your questions in the comments. Here's RSI in one sentence. It's a 0 to 100 momentum gauge that tells you how fast and how hard a stock has been moving in one direction. That's it. It's not telling you where the stock is going. It's telling you how much gas is left in the current move. The classic readings you'll hear are above 70 means overbought, below 30 means oversold. And those words sound like signals. Overbought sounds like it should drop. Oversold sounds like it should bounce. That's the trap. Those words describe momentum, not destiny. So let me show you with real numbers. This is Tesla, early 2025. The stock was sliding, and as it dropped under $300, RSI fell below 30. Textbook, oversold. Now, here's where a lot of people make the mistake. They see RSI under 30 and think it's oversold. It has to bounce, so they buy. But Tesla kept falling. 280, 260, all the way down to about $222, and RSI stayed pinned in the low 20s the entire way down. That entry near 300, you're now down more than 25%, and RSI was telling you it was oversold the whole ride. That is catching a falling knife. This is the thing RSI can't tell you on its own. In a strong downtrend, a stock can be oversold at 300, oversold at 260, and oversold at 220. The indicator is just reflecting that the selling is intense and consistent. It doesn't have a floor. Okay, so if oversold alone isn't the signal, what are we actually looking for? This is where RSI gets genuinely useful, and it's called divergence. Watch. Tesla bottomed near 222 in March with RSI all the way down at 21. Then it bounced, rolled over, and came right back down to that same level, around 222 in early April. Same price, but this time RSI wasn't 21. It was 36. Price made the same low. Momentum did not. That gap is bullish divergence. The selling was losing its grip, even though price looked just as ugly. And that was the tell. From that second low, Tesla turned and ran. From the low 220s back over $400 by September. No guarantee, ever, but that is a far better setup than just seeing a number below 30 and clicking buy. Now let's flip it, because the same logic works on the overbought side. By mid-September, Tesla's RSI pushed above 70 near $400. Overbought, but it didn't fall. It kept climbing to over 440 with RSI pinned in the high 70s for 2 straight weeks. Selling just because RSI says overbought is the same mistake flipped around. You could sell a strong stock at 400 that runs to 440. So here's the mindset. RSI is a confirmation tool, not a trigger. Use it to ask, is momentum backing up what price is doing? If you're looking at a support level and RSI is also showing bullish divergence, that's 2 things lining up. That's interesting. But RSI alone at 21 with no other reason to think the move is exhausted, that's just a description of a falling stock. And the downside I want you to carry with you. If you buy every time RSI hits 30, sooner or later you'll find a company with real structural problems, and that RSI will sit below 30 for months while the stock loses half its value. The indicator isn't broken. It's telling you the sellers are in complete control. The biggest thing to remember, oversold tells you where momentum has been, not where price is going next. Always ask why it's oversold. Is it a sector sell-off, a bad earnings print, a company with real problems? That context is what RSI can't give you. Quick reminder, this is education, not financial advice. I'm not telling you to buy or sell anything. Do your own research. So that's RSI. 0 to 100, above 70 overbought, below 30 oversold, and divergence is where the real signal lives. A strong trend will keep RSI pinned in the extreme zone a lot longer than you think. If you want to see where RSI really earns its place, pair it with the support and resistance episode linked in the description. That's it for today. If this cleared up RSI for you, subscribe so you catch the next setup before everyone else, and drop a comment telling me what indicator to break down next. Good luck in the markets, no matter what stock you're into.